Markets see broad-based selling. Nifty falls nearly 1% to hit a two-month low. 40 out of 50 Nifty stocks end in the red. Mid-caps underperform. Index falls over 1.5%. Bajaj Auto tanks over 11% after a soft start to the festive season. The management hopes for a pickup by the end of the season. Comment spooks two-wheeler stocks. Other stocks also down sharply. City gas distribution companies will see nearly a 20% lower gas allocation at administered prices, what is called APM. Companies will need to increase imports to meet demand and hike prices to maintain margins at earlier levels. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need as we look forward into the next trading session. I am Prashant. Well, we've got you covered for the next 20 minutes with all the big news of the day, the key developments on Dalal Street, earnings, top corporate voices and events to track ahead as well. But as we always do, as is the practice, we look at market action, and market action was negative. So, across the board, there was selling pressure. And the thing about this 200-point fall was that it was in a way unexpected, because it was not as if US markets were down or that oil had spiked or there was some negative news flow out of Asia. It was all very steady. Asia actually was up. Europe later in the session here for us was in the green, but the market did not recover. So, the market started selling off early and then just kept getting weaker, although we ended 200 points lower. So by close, the Nifty finally left off about 150 points below yesterday's low. And yesterday's low was about 24,900. Earnings, well, they're not doing any favors as well. Some of the well-tracked mid-cap companies have disappointed. So you had companies like Bajaj, of course, which we will get to with Sudarshan in just a bit from now. That was weak. Havells was another one which reported numbers today. There was KEI Industries which reported numbers 2 days back. It continues to sell off. And these are well-owned and stocks which have done very well. If you want to see what's done well, it's still very, very early in the earnings season. IT companies at the margin maybe have held up better. And PSU banks, names like IOB, Bank of Maharashtra, they've not exactly done all that badly. So that's been the sort of earnings part of the story. And I think at the margin, and the Bajaj commentary kind of brought that to the fore, at the margin, there are some fears that perhaps the festive season is not going all that well. Remember, markets have pretty much written off the second quarter earnings season. They're looking and they're betting on a second half recovery. And this festive season is an important piece of that second half recovery thesis. So we'll have to see if that really works out. Top losers, sectorally speaking, real estate was down, autos were lower, and you had the consumer sector, which was down as well. So, that's the long and short of in terms of what we saw today, but a down day with 200 points in terms of cut. But let's tell you stock-specific action, both up and down, more down than up. Vivek is standing by with that. Vivek.
Good afternoon. Like you mentioned, more down than up today. Quite a few winners also, some of them that actually stood out. First on our list, like you mentioned, the IT pack relatively held out today. Look at an Infosys. Infosys, good set of results, a marginal beat to estimates. Management commentary quite strong, up by almost 5.5%. The next stock on the radar, like you mentioned, actually some of the banks did quite well. Karur Vysya Bank, this particular stock ended at the day's highest point, over 6% higher today, profitability higher by 25%. You're talking about NALCO, within the metal pack, National Aluminium did quite well. Overnight strong cues coming in from the results of Alcoa. Supply, the demand situation quite tight, ended by almost 3.5%. And lastly, Larsen & Toubro, that held out even in a weak market. Earlier today, we told you about how the company had emerged as the lowest bidder in quite a large thermal auto project. So Larsen too held out quite strong. Now, on the other hand, when you're looking at the list of losers, quite a long list today. We have to start off with the auto pack. Bajaj Auto weak set, and that dragged down the entire sector today. Bajaj Auto, TVS, M&M, Hero, Maruti, all of them well in the red today. The next set of stocks, that saw quite a bit of selling pressure. We'll have to talk about Havells. The earnings were a big miss in terms of the EBITDA as well as the margins. And along with that, a lot of the consumer durable companies too fell quite significantly. SRF today, down quite significantly. UBS actually went ahead and double downgraded the stock. They had a buy rating earlier. They now have a sell rating. Oberoi Realty, again, now this particular stock among the top laggards as far as the F&O space was concerned. Stock had rallied quite a bit in the last week. Today seeing a bit of profit booking amongst the top laggards as far as the F&O space is concerned.
All right, Vivek, thank you very much for that. Ambrish Baliga is with us. Ruchit Jain of 5paisa.com is also with us in the price action. Ruchit, gentlemen, good afternoon. Good to have both of you here. Ruchit, just a comment, market fall and what from here near term?
Yeah, hi, very good afternoon to both of you. Well, Prashant, if you see the entire month of October, markets have corrected mainly because of FI selling. They have sold not only the cash segment, but in index futures also they have formed fresh short positions. And historically, you see, whenever there is such combination where FIs sell in the cash and form short positions in the index future, this combination has always led to price-wise correction. They started this October series with a long-short ratio of about 81%. And as on yesterday's data, they were around 33%. Now, means most of the position, around 67% of the positions were on the short side. Today, maybe more shorts would have been added. So this indicates that until we see this FI selling coming to a halt, I think the near-term market trend would continue to remain weak. And levels-wise, although 24,600 is the immediate support that we will watch out for, because momentum readings would get oversold there. So around 24,600, I think we should form at least a short-term support for a pullback move. But primarily, we won't expect resumption of the uptrend until we see this FIS data getting changed again.
Ambrish, at the margin, earnings are the worry?
Yeah, I mean, see, earnings clearly are the worry. I mean, the way some of the earnings have come in. But at the same time, what we are seeing is slower growth, not a slowdown, but a slower growth. And we have seen that across GST, whether it's the manufacturing sector, whether it's PMI, we have already seen some amount of GDP downgrade. So I think all this is impacting the markets because the valuations were quite stretched, and you needed much more of good news to keep that momentum on. So in absence of that, it's quite natural that the markets will start to slide, and that's exactly what we're seeing now.
Absolutely. Bajaj was the big story, right? Ambrish and Ruchit. I'll come to you for your views. 11% plus cut. Cautious management commentary. Sudarshan is here to detail that for us. Sudarshan.
So not only Bajaj Auto, all the auto constituents were sharply lower in trade today, and this after Bajaj Auto reported earnings, and those earnings were largely in line. But what has surprised market is Bajaj Auto's commentary regarding the festive season demand. But before that, it's not just after Bajaj Auto's Q2 earnings. Even before the earnings, all the auto stocks were in a continued fall. If you look at auto index, it's down almost 10% from the record high that it hit on September 27, and all the constituents are down this month and even this week as well. For example, Bajaj Auto is down almost 15%, Hero is down 6%, Maruti is down 5%. Likewise, most of the stocks were down. But we tried to find out what are the reasons of the recent fall. First, festive demand has been below expectations. Retail registrations show muted demand for the first half of the festive season, and it's confirmed by Bajaj Auto. Talking to CNBC-TV18 today, company has said two-wheeler demand in the first half of the festive season was in the range of 1 to 2%, and this is against company's expectation of 5 to 6% growth for the entire festive season, and against brokerage's estimate of growth in the range of 8 to 10%. And second is concerns related to inventory build-up. Third is raw material cost increase. And last is there is no valuation comfort that after these companies have seen an increase in the share price in the last 1 to 2 years.
Sudarshan, thank you very much for that. That's very well put and explained. Ambrish, your thoughts on Bajaj?
See, Bajaj Auto numbers, clearly, I think, the markets weren't really expecting great numbers. So I don't think it is the numbers which spooked the markets. It was more the management commentary. I think that spooked the markets because the people were expecting that most of the inventories will get cleared up because of the demand from a festive season as well as the wedding season going ahead. But the management commentary indicates that that slowdown is still there. So I think that's what spooked the stock. And possibly because of this crack, it is very much possible that we could see a further pressure on that stock.
Ruchit, any thoughts on the auto space?
Yeah, I think many of the auto names had already seen a good run up before the numbers. If I just look at the Bajaj Auto, exactly a year ago in October 23, the stock was trading around 5,000 levels, and in 1 year it has rallied from 5,000 to 12,000. It's almost 135, 140% kind of rise. So when such rally is there, the momentum readings were overbought, and there's no scope for any kind of negative news to come in when we see such overbought setups. And in case of any such negative news flows, what we witnessed in Bajaj Auto today, there's a lot of unwinding of positions of this entire rally. So I think that's what we are seeing today. So this unwinding could see some more retracement, and major support for the stock going ahead would come around 9,400, 9,500. So I think we should see some more dip towards 9,400, 9,500, where the stock should stabilize.
Well, let's talk about Infosys next, which reported numbers. They've raised their constant currency revenue growth guidance for the full year, largely on expected lines. Let's get to Rima, who's going to tell us more. Rima, over to you.
So Infosys was a good quarter in line with street expectations, but it lacked a positive surprise. And considering the stock was up 2.5% today, up 40% since June, the question is, will it excite the street? Now coming to the numbers. The company's top line grew by 3.8% quarter on quarter in dollar terms, constant currency revenue growth at 3.1%. As per the CNBC-TV18 poll, and ahead of peers like HCL Tech TCS, which had a 1.5% top line growth. The company has gone ahead and upgraded its full year revenue forecast. So 3 to 4% has become 3.75 to 4.5%. Margin guidance remains unchanged at 20 to 22%. Manufacturing, energy were the two leading verticals. BFSI momentum continued. So that was a positive. And hiring, after 6 consecutive quarters, when the net headcount of the company declined, this time the total headcount has gone up by about 2,500 employees. But that said, the total deal wins, fell by about 42% quarter on quarter, nearly 70% on a year-on-year basis, and there was no margin expansion in Q2. Considering there was no wage hike kicks in only in Q3, the street would have hoped for some margin expansion, but margins came in at 21.1%. So all in all, it's a good quarter, it's a healthy quarter, growth is ahead of peers, there is a guidance upgrade, but it just lacks a positive surprise.
Now, city gas distribution companies like MGL, IGL and other players could have to raise prices, and that is essentially because they may have to buy more LNG from the spot markets. This is, of course, source-based information. My colleague Sonal has got details. Sonal.
City gas distribution stocks, they are in focus. Remember, these stocks are already down around 5 to 6% this week so far. Sources are now suggesting that the allocation to these companies in terms of APM gas or the domestic gas, it has been cut to around 50% versus the 70% levels that they were seeing earlier. GAIL has sent out a notice to all these companies indicating the cut that was effective from yesterday, that is 16th of October. The industry, however, will see some pressure because of this, on the back of which some of the private players have gone ahead, spoken to the government as well, asking for an increased allocation. Now remember, this is something which is a routine practice where the gas allocation changes, but this time around the cut has been sharper than what was expected. So the analysis suggests that yes, there could be some margin pressure, on the back of which these stocks have come under pressure as well. Remember, the APM allocation at the start of FY24 was around 85%. So cutting it to 50% is a very steep correction, and that's the reason why the stocks are sulking in trade. This would imply a hit of around 1.1 to 2.3 rupees per SCM on their margins, because now they will have to use imported gas or LNG, which is priced at around $11 per MMBTU versus the domestic gas price, which is capped at around $6.5 per MMBTU. This would mean that the companies will have to go ahead, they'll have to take price hikes, and the calculation suggests that it should be anywhere between 5 to 6 rupees per kg. If they do that, margins will be under control, margins will be at similar levels to what they were making earlier. However, conversation with industry experts and analysts suggests that because of the upcoming assembly elections, maybe it would limit the ability of city gas distribution companies to go ahead and pass on these price hikes to customers, thereby impacting their margins. And that's why Q3 could see margin pressure for these companies. And that's why this is something which is impacting all the city gas distribution stocks today.
All right, Sonal, thank you very much for that. Amrish, if you feel strongly about city gas distribution, you have a comment here? Or
yeah,
in fact, yeah, go on. Sorry.
In fact, because of this issue, I think the margin, there would be margin pressure initially. But if you're talking of over the next possibly 4 to 6 months, they'll finally take those price hikes, and margins will come back to normal. And that's the time you'll again see these stocks bouncing back.
No, got that, Ambrish. Nestle, I want to just wrap up some of the other numbers that we got, right? Nestle, Havells also had reported numbers. So let's go across to Vinny now, who's going to wrap these out for us. Vinny, over to you.
So both Nestle and Havells, both of them have actually reported a weak set of numbers, and that's why we saw a fall coming in both these stock price. Nestle actually saw its biggest fall in almost 2 years. And looking at the numbers, weak numbers in Q2 FY25, domestic revenue growth came in just at 1.3% versus an expectation of somewhere a mid-single-digit growth. Volume growth obviously also saw a decline of 1.5%. We were expecting volumes to grow at 1 to 2%, and there's a decline this time of 1.5%. Other than that, what impacted the numbers for Nestle was lower other income was there, as well as higher depreciation. That started impacting the profitability of the company. And there was an exceptional gain also due to a lump sum sale that they had made of around 291 crores. So overall, the profitability has seen a decline, and overall a decline of adjusted PAT was also around in the range of 7 to 8%. Moving on to Havells, this one also reported a weak set of numbers. There was a miss in terms of the margins. Losses also continued for Lloyds, though it's not a seasonal quarter for Lloyds. Despite that, we have seen that the loss and the pressure on Lloyds as a business and margins has continued for a while. Festive season, that led to increase in ad spends, and other than that, lower growth in switchgears also is something that impacted the margins for the company in Q2. Emerging channels, something as a factor that impacted electric consumer durable margins, and high volatility in commodity prices impacted the contribution margin for the cable segment. So pressure seems like that was building in even on Havells in terms of numbers, not an exciting set of numbers. And that's why Havells saw a sharp fall, biggest single day fall in almost 3 years for Havells as well.
Okay, Vinny, thank you very much for that. Ruchit, if I can ask you to comment on Havells, which fell about 7-8% today. Polycab, by the way, will also be reporting numbers. KEI has fallen. All these wire companies has fallen about 8-9% 2 days. Anything stands out to you?
No, I think these are no corrective phases within an uptrend. If I look at the longer term charts, then I think the overall trend still remains positive. For Havells, the stock has consolidated in a broad range where major support would come around 1700 kind of levels. So I think some more unwinding could be there because of the numbers that we have seen. Around 1700, I think if any long-term investors are looking to buy this dip, then that should be a good level to take some contra trades.
Ambrish, you talk about some stocks, and you put out earlier on closing bell, put out Bata as a pick.
Right.
So just FYI, but you're tracking Godrej Properties as well. Tell us quickly why.
No, in fact, Godrej Properties, we saw the stock moving up yesterday. Although today is down, yesterday it moved up because they purchased land, 6.5 acres in Kharghar. And typically what happens is for any real estate company, whenever they purchase a project or purchase land, I mean, they're given a thumbs up. But then if you actually go and analyze as to what sort of returns can happen from that new purchase, I think the picture could be very different, because here we're talking of 6.5 acres of land bought at nearly 700 crores, which in fact works out to about, I think, like it's decently high. I mean, if you see from a square feet perspective, even if I give them 4 FSI, I mean, it works out to about 7,000 rupees per square feet. And they are talking of 3,500 crores of top line, which again, if you work backwards, it's about 20,000 rupees per square feet of sale of about 17.5 lakh square feet. Now, the price going in that area is 14,000. Give a premium to Godrej. You can't sell at 20,000. So I'm assuming 18,000 sale price, and if I calculate backwards, it works out to an IRR of just about 13%, which is quite low for a real estate company. So I think the fall which you've seen today, possibly people would have done some amount of calculation, and post that we have seen this correction.
Oh, okay. All right. That's a neat explanation for that. The economics of the latest land purchase. It's not looking all that great. Thank you very much, Ambrish and Ruchit, for joining us. Appreciate your time here on CNBC-TV18. We'll take a quick break here, come back, and we'll tell you the events to watch out for on the other side. Welcome back. You're with us here on Markets Forward. Let's tell you about the companies which joined us through the course of the day on the channel. And what they told us, L&T Technology Services is expecting between 8 to 10% growth in revenues for FY25 with EBIT margins at 16%. The company told us that while tech vertical is expected to do much better in the third quarter, mobility is likely to be muted. The furloughs in mobility could impact growth in the third quarter. Further, they said that indications from clients suggest that calendar 2025 is expected to be better than 2024. We also have the management of Stylum Industries. The laminate manufacturer expects revenue growth of between 25 and 27% in FY26 as well as in FY27. It's anticipating its margins to hold between 21 and 22% levels. The company also said that one of its plants is operating at 95%, while the other one is operating at between 80 and 85% capacity utilization. In case of brownfield expansion, the management said it will be commissioned from March 2025. We also have the management of South Indian Bank who joined us, and they said they're aiming for deposits to grow by between 8 and 10%. The lender is looking to get more aggressive on deposits. It hopes to maintain a credit deposit ratio between 77 to 78%. Well, that's a sort of sliver of management commentary that you heard from on the channel today. Let's tell you the events to watch out for tomorrow. Vinny standing by. Vinny.
Yeah, so key events that we're keeping an eye out on. Yeah, let's start with some of the global events. We have UK in the UK, we'll see the retail sales numbers coming out. In China, let's watch out for the GDP data, retail sales, industrial production, as well as home prices. So that's going to be a key factor that we're keeping an eye out on in China. Talking about Japan, we have the CPI data in Japan. So that is important on that front. While on the domestic front, let's keep an eye out on some of the fundraising plans. So Ajmera Realty, the board will be meeting to consider fundraising, as well as Hindware Home Innovations. That also the board meet is going to be there tomorrow. Corporate action, HEG stock split will be taking place tomorrow in the ratio of 1:5. So that adjustment will be taking place. Lock-in period for other housing finance is going to be opening tomorrow, around 22% of the stake shares that will be there. So that is opening up in terms of the lock-in period. Key earnings that we're keeping an eye out on from the Nifty front. Let's watch out for Tata Consumers. Other than that, we have Hinzink, ICICI Lombard, Geo Financial Services, Mastec, as well as Z Entertainment, which will be reporting their numbers tomorrow.
All right. Vinny, thank you very much for that. It's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side. Thanks for staying with us.